The up move on Wall Street pauses as the Nasdaq retreats from record levels ahead of Fed Chair Jerome Powell's testimony and the February jobs print later this week. Treasury yields are steady while the US dollar is firm below 104. Stocks in the Asia-Pacific open mixed following a weak handover from Wall Street. China sets a growth target of around 5% for 2024. The GIFT Nifty suggests a lower open for the Indian market. Crude prices slip after OPEC Plus extends voluntary oil output cuts until mid-year. Brent hovers around $82 per barrel. Gold prices rise above $21,000 an ounce, the highest level ever as traders bet on the Fed cutting rates in the second half of this year. Bitcoin tops $68,000, closing to its November 2021 high. And Tata Motors will split into two listed companies. The board decides to separate the commercial vehicles business as a separate entity, while the passenger vehicle business, including electric vehicles and JLR, will operate as a separate entity. The Reserve Bank of India bars IIFL Finance from sanctioning gold loans with immediate effect after observing supervisory concerns. RBI says the restrictions will be reviewed after the central bank conducts an audit. Good morning and welcome to Power Breakfast. I'm Pavitra. Those are the top headlines that we're looking at this Tuesday morning. There's a lot to look at, specifically in terms of the global cues, because we did get a bit of a pause in terms of the rally on Wall Street. In Asia too, China has set its growth target at 5%, which is the same as last year. More importantly, it is one of the lowest that we've seen in many, many years for China. The NPC has started, however, the National People's Congress, and all eyes are really on that to see what kind of steps the government can take, in order to boost growth, in order to give some kind of stimulus to the economy. But on the back of that, you have Seng down almost 200 points. Remember, a lot of the Chinese companies are listed in the Hong Kong market, so that index trade-off is down over 1% right now. Shanghai has recovered a tad, but trading absolutely flat right now. It was seeing a much steeper cut a few minutes ago. The Taiwanese index, like you can see, is up on your screen. That's actually the top gainer this morning. So the Taiwanese index is up 0.6%. You have Straits trading with some minor gains, but just about managing to hold in the green. Barring that, the rest of the Asian markets are definitely in the red this morning. The GIFT Nifty will come up for you, and it is indicating that to kick things off, we are going to see a little bit of a lower start. Maybe quite flat right now, just around 5 points lower is where we're at on the implied open for our own markets. We shut just at that 22,400 mark, so maybe we open close to those levels as well. So that's what's really happening across Asia. But like I was mentioning with Asia, the key news that has come out is that China set an economic growth target of 5%. This is for 2024. It's very similar to last year's goal as well, and is in line with what analysts were expecting. Now, reports say that at the second session of the 14th National People's Congress, China will plan to run a budget deficit of 3%, and they'll also issue 1 trillion yuan in special treasury bonds. During the session, the government is also expected to draft the defense budget for 2024. Listen in to Hui Shan, who's the chief economist at Goldman Sachs, and he believes that the growth target that China has set really signals that the government wants to run the growth at some kind of acceptable level. Listen in.
These numbers, 531, 5% growth target, 3% deficit, 1 trillion special bond, are in line with market and our own expectations. What that says to us is that the leadership still wants a reasonable or high growth number, hence the 5% growth. And as the report is saying that 5% is not going to be easy. We had a 5% last year on the back of a reopening, so this is not going to be easy. Recognizing it's not going to be easy, but still set at a 5%. I think that's a pretty clear signal that the government wants to have a growth running at an acceptable level for them.
All right, that is the word coming in from Goldman Sachs. Of course, we're going to be tracking the NPC very closely, and we'll bring you all of the outcomes. But let's also talk about the US market now, because Wall Street ended yesterday, quite a lot lower, pushing the tech-heavy Nasdaq and the S&P 500 off their all-time highest levels. So the Dow Jones also lost almost 100 points. Shares of, like I was mentioning, a lot of the tech names fell quite a bit. So Apple was down 2.5%. This because the European Commission has hit the company with more than $1.95 billion in terms of an antitrust antitrust fine for abusing its dominant position in the market for distribution of music streaming apps. So that's why Apple was down 2.5%. Tesla shares also dropped over 7% yesterday because the company announced new price discounts and incentives last week. And in some important commentary coming in from the Federal Reserve, we had the Atlanta Fed President Raphael Bostic, who said that there is no urgency for the Fed to cut rates right now, and he wants to see more progress in terms of the move on inflation. He still thinks 2 quarter-point rate cuts will be appropriate. That is, of course, by the end of this year. So that is some important commentary as well coming in from the US. That's everything that we're looking at globally. Let's talk about how all of these cues really impact our own markets and everything that you should track as well. We have Hormaz, Mangalam and Sudarshan all joining us with the trade setup this morning. Guys, a very good morning to all of you. Hormaz, let me come to you first. Looks like a very, very flat open for our own markets.
It was
take us to what we should watch.
It was a flat start to the week as well, right? And the Nifty is taking a pause after the rally that we saw on Friday. So it's a bit of a sluggish start, as the GIFT Nifty is also indicating an extremely flat start. But despite a very flat session yesterday, the good bit was that there was extremely robust buying from domestic institutions. Well, foreign investors had a selling figure of around 500 crores, but domestic institutions were buyers of over 3,500 crores in yesterday's trading session. So pretty robust there. Now, what is outperforming on a flat day was the Nifty Bank, and that will be the one to watch out for today because it is nearing a very important level of 47,500, which it has not closed above since the 12th of January. So we'll keep an eye out on that one. However, pockets of pressure continue to persist despite a flat market. IT continues to remain under pressure. There is a CLSA downgrade coming in as well in today's trading session. So we'll keep an eye out on that. Hospital stocks continue to remain under pressure. They were down almost 4 to 8% in yesterday's trading session as well. But the outperformers were the PSUs. Of course, the rally is resumed again. The PSE index was up 2.5%. But BHEL, that is one reaction in this stock we'll be keen to watch. 12% higher yesterday. But interestingly, the delivery volumes yesterday were only 12%. Compare that to the average that we have seen over the last 5 days has been anywhere between 30 to 60%. So we'll see the reaction in BHEL in today's trading session, whether there is any follow-up to that as well. Globally, as you highlighted, China has set a 5% growth target, so Asian markets will be reacting to that. US markets ended lower, mostly courtesy the reaction to Apple, and GIFT Nifty is indicating an absolutely flat start, as you just highlighted. Back to you.
All right, so let's see how the rest of the trading session pans out. Hormaz, thanks a lot for that. Now it's over to Sudarshan, who's looking at all of the stocks. Sudarshan, Tata Motors is going to be a big one today.
That's great. Morning, Poida. So we'll start with Tata Motors. That might be stock of the day. Company has announced that it will demerge commercial vehicle and passenger vehicle businesses into 2 separate listed companies and shareholders to have identical shareholding in both the listed entities. Tata Communication, government has approved additional authorization to provide M2M services, that is machine to machine, and this authorization is for providing IoT services using unlicensed spectrum. IIFL Finance, RBI has directed company to not sanction gold loans with immediate effect after material supervisory concerns observed in gold loan portfolio during inspection. Till Q3 FY24, gold loans constituted 30% of total AUM. Next is DCB Bank. It's related to IIFL Finance. Company says it has co-lending arrangement with IIFL Finance since August 2021, but as of now, portfolio performance has been satisfactory. NTPC has signed JV agreement with UP Vidyut Nigam for development of renewable power works. Keep an eye on defense stocks BEL, BEML and Midhani. Defense Ministry has signed MOU for development of advanced fueling and control system, and this will be for engines of heavy duty applications. Macrotech developers will be in focus. Sources say company has launched QIP to raise up to Rs 3,300 crore and indicative price is likely at 7% discount to CMP. Also keep an eye on Bharat Forge. February North America Class 8 orders have come in at 25,700 units, which are down 9% month-on-month and up 11% year-on-year. AUSFB, RBI has approved merger of Fincare Small Finance Bank with the company effective April 1, 2024. And last is KIMS. Company has announced that it will develop a 300-bed hospital in Thane, and investment for the same is expected to be around Rs 500 crore.
All right, that is a long list. Sudarshan, thanks a lot for filling us in with all of that action. Finally, it's over to Mangalam, who's looking at all of the cues from the futures and options space. Hi, Mangalam.
Good morning. So yesterday there was consolidation, but no real worries because all the 3 indices ended mildly in the green. And in that as well, there was a record close, so to say, the Nifty closing above that 22,400 mark. The Nifty Bank outperformed in yesterday's trading session. The mid-caps, while they were positive, the broader markets told you that there were more stocks declining than the number of stocks that were advancing. What really did well yesterday, the PSU rally, that resumed. So we had a big move come by on BHEL, NTPC with news backing them. Also names like Oil India and GAIL saw some gains too. And that told you that maybe this was a lot of domestic buying that took place in the markets. And that's exactly what the data confirmed as well. Almost 3,300 crore worth purchase coming in from the DIIs in the cash markets. The FIIs, while they sold in index in the cash market, in index futures, the lack of falling in the market made them go ahead and buy some positions, and they bought again in the Nifty as against the Nifty Bank. So 1270 crore worth purchase, 1250 crores of that was attributed towards purchasing Nifty, and they actually lightened their positions on the Nifty Bank by selling about 40 odd crores itself. What did they do in the index futures? They added about 6,000 longs, and an equal number of shorts were contracted as well. So net addition was close to around 11,000 odd contracts, and that took their long exposure higher to 38% from 35% yesterday. Importantly, now that the market is consolidating, option writers are pretty active at the most active strike, which is the 22,400 mark. 22,400 call and 22,400 put, both of them seeing 25-26 lakh shares in open interest with a premium of 250 rupees on a combined basis, telling you that the options writers do believe that the market would be in this range of 22,150 at the lower level to 22,650 on the way up itself. And finally, it's a Tuesday, so obviously keep an eye out on the Nifty Financial Services Index. It is FinServices expiry. The index is at 2927 and 21,000 call is extremely active. So that's one mark we'll be watching out for.
All right, we will watch out for that. Mangalam, thanks a lot for taking us through all of those cues. That is the trade setup this morning. But with that, we are going to get into a short break. On the other side, like we told you, Tata Motors is going to split into two separate listed companies. We will bring you all of the details of that big demerger when we come back. Welcome back. Hope you guys are having a good morning. And the big news story this morning is clearly that Tata Motors will split into two listed companies. The board has decided to separate the commercial vehicles business as one, and then the passenger vehicle business, including electric vehicles and JLR, as a separate entity. So Parikshit is here to really break down the details. Parikshit, take us through what the new group structure could look like.
Currently, passenger vehicles and commercial vehicles are all under the same entity, but this is going to change. The board has approved a proposal for demerger, which will bring all commercial vehicles under one entity and passenger vehicles, EVs, JLR, vehicle software under one separate company. The rationale is this. This will empower separate businesses, reinforce accountability and deliver high growth. Tata Motors also believes there is considerable synergy across PV, JLR and electric vehicle businesses. There are also synergies in areas like autonomous vehicles and software. Shareholders will continue to have identical shareholding in both listed companies. N. Chandrasekharan, the chairman of Tata Sons, said the three automotive businesses are now operating independently. This demerger will further help them better capitalize on the opportunities provided by the market by enhancing their focus and agility. Now, if you look at the FY23 revenue numbers, that also explains you the story. 21% or the 70,810 crore revenue came from commercial vehicle business of Tata Motors. 14% of 47,868 crores came from the passenger vehicle business, and 65% of the revenue, or 2.2 lakh crore, came in from Jaguar Land Rover. Now, let's look at the market share across segments. Tata Motors has a 38% market share in commercial vehicles, where it is the market leader in India. However, Tata Motors is not the market leader in the passenger vehicle segment, where it has a 14% market share, but almost neck to neck with Hyundai Motor Company in India, which is second to Maruti Suzuki. So it is gunning for the top spot in the passenger vehicle market. In the EV segment, Tata Motors is the leader with the highest market share of more than 70%. What is the industry feedback on this demerger? Well, analysts believe there is a high growth opportunity in PVs, EVs and JLR, and the company with this move can capitalize on growth opportunities across businesses and also unlock shareholder value. This will also simplify the management, unlock personal mobility synergy across businesses and get the core business right, both for commercial vehicle segment and the passenger vehicle business as well.
All right, Pariksha, thanks a lot for getting us all of the details. That is Tata Motors set to demerge into two separate entities. We will, of course, track this stock very closely. But moving on to another important story, the Reserve Bank has directed IIFL Finance to stop sanctioning or disbursing new gold loans with immediate effect. The central bank says that it observed material supervisory concerns in the company's gold loan portfolio. So Ritu is here with the details. Ritu, what does this really mean for IIFL Finance now?
That's right, the Reserve Bank has barred IIFL Finance from sanctioning or disbursing any new gold loans or even assigning, securitizing or selling any of it with immediate effect owing to material supervisory concerns. It can only continue to service the existing gold loan portfolio through the usual collection and recovery processes. Now, RBI said that the action on IIFL Finance was prompted by material supervisory concerns in the gold loan portfolio of the company, and that included serious deviations in assaying and certifying the purity and net weight of the gold at the time of sanction of loans and at the time of auction upon default as well. There were breaches in the loan to value ratio, significant dispersal and collection of loan amounts in cash far in excess of the limit allowed, non-adherence to the standard auction process, and lack of transparency in general in charges that were being levied to customers. RBI noted that these practices, apart from being in violation of regulatory norms, they also significantly and adversely impacted the interest of customers, prompting this action from the RBI. And RBI said despite engaging with the senior management and auditors of the company, there was no meaningful corrective action that was taken. Now, RBI, however, says that these actions will be reviewed after the completion of a special audit instituted by the RBI and after rectification by the company of the audit findings and the findings of RBI's inspection to the satisfaction of RBI. Now, IIFL Finance is one of the largest NBFCs for gold loans in India. Gold loans actually constitute nearly 32% of their total assets under management at 24,692 crores as of the third quarter, with gross bad loans for the portfolio at 0.80%. And the company claims to have more than 19 lakh active customers in this segment. So needless to say, a big hit for IIFL Finance.
Oh, absolutely big hit coming in there for IIFL Finance. Ritu, thanks a lot for that. The company has also released a statement with respect to the RBI's actions, and they say that they reaffirm the commitment to rectify the central bank's observations in the gold loan portfolio in order to comply with RBI's findings at the earliest. In fact, IIFL Finance will also be holding an analyst call today that is scheduled at 8:30 a.m. We'll bring you everything, from that call as well. But this is what we have so far on IIFL Finance. We'll get into a short break on that note. On the other side, we're tracking all of the cues from the commodity markets. There's big moves seen there too. Stay tuned. We'll be right back. Welcome back. You're still tuned into Power Breakfast. We've gone through all of the equity market action, so let's get a check on the commodities as well. Manisha joins us. Manisha, good morning. What are you looking at today?
Well, I'll start with the crude oil prices, Pavitra, which are trading below 4-month highs that we were trading at yesterday. Remember, the prices did gain 3.5% in the previous week, but the OPEC and allies have extended voluntary production cuts, but the markets do believe that this was on expected lines and they haven't cut more than what they were already doing, and that is creating a surplus into the market. So we have seen some profit taking at those levels. But the big headlines clearly are from the gold prices. At a 3-month highs now at $2,100 an ounce. We are very close to the all-time high of $2,135. So this is a thing that markets will watch out for. There are various reports suggesting that the gold prices put in an all-time high in the month of March itself. What the street is now waiting for is the U.S. jobs data and the U.S. Fed Powell speech at the Congress. That will give us further cues.
Okay, Manisha, thanks a lot for getting us all of that action. We will watch for all of these cues. With that, we're completely out of time on this edition of Power Breakfast. Thanks for tuning in. We have Bazaar on the other side.